Gautam Sinha Roy of Motilal Oswal Securities also joins in for a fundamental view this afternoon. Gautam, hi, afternoon. What are you making or what are you recommending to your clients at this point in time in terms of a strategy ahead of the FOMC policy on the equity markets and even post based on any sort of permutations and combinations that you're working with right now?
Right now, times are quite uncertain, not only because of the FOMC meeting, while we don't expect some major move from the Fed, US Fed as yet, but the statement and what inferences investors globally will draw from the statements that the Fed or Mr. Bernanke makes will be quite important. And we believe it's best to be cautious at these times again. Although we are finding select pockets where we see some value emerging, but overall the market outlook continues to be cautious. Stay with good quality stocks in the pharma, IT, private banks as well as consumer facing names, which is where we continue to see traction. So we don't see any change in the broader market direction or sectoral preferences as of now. So we'll continue to remain invested in our preferred sectors, and that would include telecom too, where Idea is our top pick.
Okay, Gautam, hi. I was just going to get to that, whether telecom has popped up on your buy list or not. You said Idea is your top pick in that space. What is the target price that you have on Idea, and what are the key triggers? Because there's been so much news flow on the telecom sector. What are the key positive triggers that could lead to some, perhaps some earnings improvement as well?
Yeah, Idea is and telecom as a space we have liked for quite a few months now. So it's not a new addition in that sense. It's just a continuation of our preference for that sector. As of now, our target price would be closer to rupees 160 based on fundamental valuation. But what we note here is that the competitive intensity in the sector is declining meaningfully, and the pricing power, which was at its bottom somewhere last year, is improving. So is the number of voice minutes available to the incumbents. Combined with this increased penetration of data, these three factors together will drive huge operating leverage for the sector, which should improve profitability very strongly. So the profit number is hugely leveraged to all these factors, including revenue per minute and voice traffic, given that costs are more or less fixed. So in that sense, this is one sector where there could be a secular earnings growth across the board over the next few years. So from that perspective, we do like the sector, and we believe that even at these valuations, there is good upside, potential upside based on earnings revisions going forward, upward revisions in earnings going forward. So that's one theme that we continue to play. So in a nutshell, it's one of our preferred plays among the few sectors that we have continued to like for the last quite a few months. So overall strategy or sector preferences doesn't really change.
Gautam, so many stocks in the broader markets have been completely smashed out of shape in the last couple of weeks, and Apollo Tyres is one of them. Even today that stock is down about 2.5% post that deal. At what price do you think that stock could stabilize at, and what would your recommendation be now?
We don't really cover the stock, so there would be no price recommendation. But one thing clearly that comes out of the deal is that it's a huge leveraged buyout deal, the kinds of which the market doesn't really like in these environments and these risk-averse environments. And obviously the company will have to work really hard over the coming few years to pay back that debt, and which is when equity holders will probably start, after that, equity holders will probably start getting returns. So from a longer term perspective, if the integration happens successfully, there could be a big story there, but from the coming few years, from a cash flow to equity perspective, should be a challenge is what I think will be the case with Apollo.
Gautam, would you have a view with regards to a couple of these banking hopefuls, and which one would you bet on in terms of possibly getting the license on a more as opposed to others?
There are quite a few contenders which look good. So you'll have to really build a basket around that. Some of the obvious names that come to your mind would be the larger conglomerate-backed NBFCs that have had good operational track record, including Mahindra and Mahindra Financial Services. Bajaj Finance would be another name. L&T Financial Services. Then IDFC would be another good contender from a getting a banking license perspective. Now the power finance companies like PFC and REC, for them getting a bank license would really help them from a longer term perspective, but it remains to be seen whether they would be considered. So quite a few names. LIC Housing Finance could be another name. So it's best to identify the good quality stocks around this theme and build a basket, and not only look at this possibility of getting a banking license, but also look at the business fundamentals and growth and valuations, whether they are in the right place, and then take a call. So that would be our perspective on playing this theme.
Okay. Earlier we had a guest in the morning, Gautam, from Motilal itself, who pointed out that the emerging market flows have picked up on the downside. So there's been quite a bit of redemption pressure that we've seen in emerging markets, both in debt as well as in equities. Considering the mood is so subdued in markets like India, do you advise putting in fresh money at this point in time at all? I mean, you've been talking about your recommendations, but do you think it's prudent to put in money right now, or would you sort of want to be up on cash and not make any fresh purchases into the market?
Not on an absolute basis. It's not that one shouldn't put money at all, but obviously one should keep some portion of your cash aside for possible opportunities in the future. That is definitely the case here. But still selectively, if one is getting good opportunities and good themes, one can still pursue those kind of opportunities. But yeah, on a net basis, it's best to be cautious and not be fully invested in markets. While you have to be invested to some extent, you can't just sit out. But at this point, you have to have some degree of cash reserve, and that would be completely a function of your risk averseness. Because given the overall situation, the mood of the global markets, wherein reverse flows from emerging market equities seems to be happening, and that could keep on happening till this hangover of QE rollback continues, which could be quite some time actually. So we should keep on getting opportunities for deploying cash at better valuations than what we are seeing currently. So that should be the overall outlook for investing in equities and in Indian equities over the next year or so.
Okay. Gautam, would you have changed your strategy with the volatility that we've seen in the rupee? Would you have changed your equity strategy because of that?
Not substantially, but yeah, we would have recommended more IT stocks, HCL Tech and Infosys being the prime favorites within that. We're already recommending pharma names, so that's another sector which should benefit from the fallen rupee. So these two sectors are very obvious names where the stock prices should, over a period of time, benefit from the depreciation in the rupee.
Okay, thanks Gautam for joining us. We'll have to